It's Business Incorporated. Thank you for joining us. I am Bisi Adebayo. Coming up today, UK manufacturing expands at the fastest pace since 2017. AFDB grants additional $3.5 million for electricity interconnection project between CAR and the DRC. Plus, South Africa's credit growth rises to 3.2% in October. Well, let's get the show started right away with intraday numbers coming from major markets we track in Africa, which are all in the green at intraday. Now, the Nigerian All-Share Index is up 0.23%. And in South Africa, the JSE index was 0.66%, also at intraday. In Egypt, the EGX30 also rose 0.84%. And the Kenyan Birrs closed strong at 1.3% up on Monday. Meanwhile, in the Middle East, the markets were mixed, with the Dubai index up 0.82% at intraday, and in Abu Dhabi, the index was down 0.4%. It's a similar situation in Qatar, as the index was 1.3% positive, though, and the Saudi index was down 0.45% at intraday. And in Europe, stocks are trading in positive territory today, following a trend set by other global markets. Investors are also digesting the new economic outlook released today by the Organization for Economic Cooperation and Development. Conrad Bolson will be telling us more about that. Good afternoon, Conrad. It's good to see you again. All right, Conrad, let's just get into the conversation right away. The OECD has released a new economic outlook today. What is it like, and how reliable are such forecasts in light of the pandemic?
Well, we see, of course, because of the pandemic, it's even more difficult than usual to put exact number on any kind of economic forecast. That's why people on the markets are listening very closely to the wording the OECD experts are using to describe what's going on and what kind of outlook they have. And I think here it's important to say that both the upside and the downside scenario for next year that the OECD came up with both point to a continuous recovery, albeit an uneven one. A shaky recovery next year is what we can expect. In the different countries, the recovery is very much depending on how much money governments are willing and able to spend on, bridging the gap until we have a corona vaccine. What's also important is, how quickly a vaccine next year can be distributed. And also, of course, it's important how quickly, policies are implemented, like the furlough schemes or short-time work schemes. If you take Germany, for example, in November, the month where our country entered a new partial lockdown, the number of people who are without a job, the unemployment rate has actually declined. And this is because we have a short-time work scheme functioning. The state subsidizes it when companies do not immediately lay off their people, but keep the contracts intact. Then 60% of the wages are paid for by the German taxpayer, by the social security system.
All right, Conrad. Now, another indicator for the economic outlook are commodity prices, and the price of copper has risen to the highest level in more than 7 years. Tell us, what's going on?
Well, Dr. Copper is what the price of copper is often called among traders, because it's such a reliable, predictor for what's going on in the global economy. In this case, it's predicting or saying very much about what's going on in China, because China is the #1 place of demand for copper. So many buildings are built there, so many electrical and electronic devices are produced there, and for all this you need copper. So the fact that the price for copper has risen to a 7.5-year high, of course, is an indicator for how strong the recovery has been in China. We've been getting more indicators about this. Yesterday, we talked about the Purchasing Managers Index by the Chinese government, which has increased quite nicely. Today, we got a report from Caixin, the media company that also calculates a Purchasing Managers Index, also quite nicely on the rise. The only problem with this, if you look at it from Lagos or from the point of view of Frankfurt, is that China has been so in advance in tackling the corona pandemic. Of course, the recovery there happens quickly. In other countries, it's not so quick. So it's only reason for us here to be, in parts, optimistic about the future.
All right, finally, Conrad, just before you go, a lot is happening in the banking sector with Italy's UniCredit losing its CEO. What are the implications of this for the European banking sector in general?
Well, this has fueled consolidation talk on the bourses, on the exchanges of Europe, because in the case of UniCredit's CEO, he was rumored to be strongly against the potential takeover of the, bank Monte dei Paschi, which had to be rescued by the Italian taxpayer, and where the state in Italy now wants UniCredit to take over what's left of Monte dei Paschi. The CEO of UniCredit was against this, but obviously the state had more influence. The supervisory board was in favor of takeover of Monte dei Paschi, so the CEO had to go. In other parts of Europe, many banks are ripe for consolidation. Here in Germany, for example, Commerzbank is a candidate that might become a takeover target. And that's why the share price of Commerzbank here in Frankfurt today is a big gainer. It's up more than 3%.
All right, Conrad, thank you, and do enjoy the rest of your day. All right, now, latest PMI data coming from the UK shows the manufacturing sector expanded at the fastest pace since 2017 in November. Well, let's get more details from Juliana Olainka, who joins us from our studio in London. Good afternoon, Juliana, it's you and I once again. So the manufacturing PMI rose to 55.6 in November from 53.7 a month earlier, and that takes it further above the critical 50 mark that signals expansion. What drove this expansion?
Yeah, good afternoon, Bissy. Well, it's Brexit, really. Brexit stockpiling. The fact that today, somebody just reminded me, is 1 month or 30 days until the end of the transition period. And stockpiling has been a major theme for a lot of people in the manufacturing industry, as well as orders. A lot of people from the EU have been doing excessive ordering, and that's really buoyed up these new PMI numbers. PMI obviously gives the British public a taste into what the private sector or how the private sector is working. So the fact that we've actually had a revised PMI which is much higher for the beginning of December does show that December could potentially be off to a flying start. As you were saying, 55.6, this is a 35-month high for PMI numbers. So this is great for the British government, especially considering we are expecting to head into a double-dip recession. And of course, this figure represents November, which was when England was in a lockdown, and outside of England, we were in tougher restrictions. So manufacturing is particularly buoyant at the moment. Is it going to last beyond November into December and January? Only time will tell.
We'll find out in about 4 weeks or thereabouts. Now, you spoke to Chimmy about this yesterday, and I'm referring to the issue of Debenhams. Now, the chain store is officially winding down, and that puts 12,000 jobs at risk. Of course, this didn't in any way come as a surprise.
Yeah, this is a major story in Britain. Major. It kind of transcends business, and that's probably because Debenhams is a 242-year-old company. I was even surprised it had been open that long. It opened in the 1700s, so it's obviously survived world wars, recessions before, but the double whammy of COVID And the internet seems to have secured its fate today. As you said, 12,000 jobs will go. Already in the summer, Debenhams got rid of 6,000 jobs. And again, this kind of is a bigger story than just Debenhams. This is a story about the high street. This is the story about the local council and what the future of that is likely to be. Some are predicting it's going to be something like we haven't seen in about 100 years. And now most people are going to be shopping online. A lot of these big department stores as well, they pay business rates. That's what funds most of the local councillors. So a lot of local councillors are going to be really concerned at the moment because they're not going to be getting those rents in, that money that they raise through people renting these big spaces that we were typically seeing on the high street. And of course, as well, we spoke about it yesterday about the Arcadia Group, which is Topshop, Topman, Wallace. They also have a knock-on effect on why Debenhams fell into administration, because a lot of these small stores like Topshop and Topman were also selling within Debenhams as concessions, and they pulled in about 40% of their annual revenue. So when the lights went off on Arcadia, it was only inevitable that Debenhams wouldn't survive. So yes, this is it's a huge story, a huge loss, and it really goes to show that 16 to 24-year-olds are bearing the brunt of COVID job losses here in the UK. Retail, especially high street retail here in Britain, has really been helping parents keep their children staying off the streets, keeping money in their pocket. Great part-time roles, particularly for young girls as well. And now we're seeing the collapse of such huge giants like Debenhams and Arcadia. It does leave lots of food for thought, as if what a 2021 world will look like, and all of these viable positions that the global north are going to have to start providing for these young children.
Well, then many just look forward to a recovery in 2021. I mean, we can only keep hope alive. But just before you go, Juliana, tell us what sort of reactions are we getting from the market to all of these news?
Well, as I said, December's off to a flying start, and the FTSE is really showing that triple-digit positive figures on the FTSE. We've actually had nationwide house price index out showing that house prices are still rising. They rose month on month 0.9%. Still very, very difficult to buy a property here in Britain. And of course, that positive PMI data from the manufacturing industry. So the FTSE All Share is up 1.71%. The FTSE 100 is up by 1.87%. And the FTSE 250 is up by 0.99%. In the currencies market, the British pound also up against the US dollar by 0.22%, down on the euro by 0.15%, and up on the Japanese yen by 0.24% at intraday BISI.
Thank you, Juliana. Do enjoy the rest of your day, and we'll see you again tomorrow morning. All right, shares in Asia Pacific closed higher on Tuesday as investors react to the release of a private survey of China's manufacturing activity. The Manufacturing Purchasing Managers Index for November came in at 54.9, and that's its highest reading in a decade. Meanwhile, mainland Chinese stocks were higher by the afternoon. The Shanghai Composite gained 1.3%, while the Shenzhen Component rose 1.267%. In Hong Kong, the Hang Seng Index was also up 0.9%. In Japan, the Nikkei 225 advanced 1.5%, and the Topix Index added 0.87%. South Korea's Kospi gained 1.37%. Shares in Australia also rose, as the S&P ASX 200 jumped 1.34%. And across to the U.S. now, stock futures were also up early Tuesday morning after the major averages notched sharp monthly gains for November. Dow Jones Industrial Average Futures traded over 300 points higher. S&P 500 and Nasdaq 100 futures also traded in positive territory. Now, the Dow rallied 11.8% in November, posting its best one-month performance since January 1987. The S&P 500 and Nasdaq composites rose 10.8% and 11.8% respectively for their strongest monthly advances since April. We'll be talking commodities when we return in just a moment. Do stay with us. Welcome back. OPEC, the oil producer cartel, which controls 40% of the oil market, has cut down production by 10% in order to achieve price stability. This has led to oil prices now trading at about $47 per barrel. OPEC started a meeting yesterday seeking compromise on oil cuts. However, the production cut does not include condensate, a high-value light crude extracted as a byproduct of gas production. A research analyst at the financial derivatives company Oecd joins us now to discuss the implications of this on the Nigerian economy. Good afternoon, Mayowa. Thank you for joining us on the program. Now, Nigeria produces an average of 400,000 barrels of condensate per day at $30 per barrel. How important is condensate to Nigeria and the economy in general?
Good afternoon, BC. So condensates are basically lightweight oil that is produced as a byproduct of gas production. And then it's been exempted from OPEC's quota because its definition, there's a lot of complications surrounding its definition. We know that in Nigeria, oil is our cash cow. We're largely dependent on oil. It's our major source of revenue and foreign exchange. And currently, as of today, we know there are three major challenges surrounding oil in Nigeria. There's the drop in oil prices. You also have the oil production cost from OPEC, and then it's generally led to a decline in our total revenue. And so it's become important for Nigeria to look for every source of foreign exchange revenue outside of the crude oil that we export. And if you look at condensate, for instance, in Nigeria, at the rate of $30 per barrel, if we're exporting about 200,000 barrels of condensate daily, that means we'll be making about $6 million daily. And in 2 months, we'll be having about $180 million from condensate. And that alone is almost the same as the amount of revenue we get from exporting cocoa in a year. And in 1 year from exporting condensate, we would have about $2.4 billion. And we know that we need that kind of source of revenue for us in Nigeria. Currently, OPEC has postponed its meeting till Thursday because they have not been able to reach an agreement on production cuts. And generally in the world, also in the oil industry, there are a lot of uncertainties and unknowns, and then it's affecting Nigeria. In Nigeria alone, at the parallel market, the naira is already trading at 500 naira to $1, meaning that we need to find other sources of revenue. And this is where condensate come in. Luckily, we do not have, condensates are not part of the OPEC cut. And so it's a very, very good source of revenue. So the government needs to incentivize all companies to actually produce condensate LNG crude oil. But more importantly, we should actually note that this revenue, when it comes, it should not be for consumption. It has to be efficiently and strategically invested so we can actually reap more benefits from it.
Now, in the last 12 months, oil prices have fallen by an estimated 57%, and that's due to the effect of the COVID-19 pandemic and the lockdowns that followed. Is there any correlation between the price of oil and condensate? So their prices actually move in the same direction?
So condensates are a substitute to oil. They complement oil. So when the price of oil goes up, the price of condensate also go up. So there's a direct relationship between the two. But for us in Nigeria, that's not really important. What's important is how much we can actually make from condensate and how efficiently we can actually invest the revenue that we get from condensate.
All right, now let's talk about Dangote Refinery now. Of course, a 650,000 barrels per day integrated refinery and petrochemical project under construction in the Lekki Free Zone is expected to be ready for oil refining in 2021. Now, will this have any impact on condensates?
So there will be no direct impact on condensates, because the Dangote Refinery is mainly refining crude oil that we wouldn't have to be the amount of crude oil we export crude oil, then we import back. The benefit for that with the Dangote Refinery on that would be cost savings, the transportation costs, the forex savings that we would be saving, our costs that we'll be saving from all of that. But then also, it's important to note that when the crude oil that we're refining locally, we will use it locally, most of it, which may actually lead to a drop in our revenue from crude oil. This is where condensate can come in. Condensate, the revenue from condensate can help cushion the effect of the drop in revenue from a drop in earnings from us refining our crude oil locally as opposed to exporting it all and importing back.
All right, that would be a good point to leave the conversation. Research analyst at the FDC, Oecd, thank you for your time this afternoon. In other stories now, the African Development Bank has granted an additional donation of $3.5 million to the Central African Republic to help the country complete the first phase of an electricity interconnection project with the Democratic Republic of Congo. This additional donation will finance, on the one hand, the rehabilitation of the Boali hydroelectric power station with a capacity of 10 megawatts, and on the other hand, the updating of the feasibility study of the electrification project of 9 localities. Now, this new grant brings the bank's total contribution to $45.73 million. Travel now to South Africa, where credit growth has risen to 3.2% year-on-year in October, and that's according to the central bank. Now, the bank has also shown that the expansion in the broadly defined M3 measures of money supply also rose from 9.48% in September to 9.83% in October. October quickened to 3.24% year-on-year from 3.12% in September. Now, the chief economist at Macquarie Fund Managers says the rise in credit growth shows that more people have access to credit. Let's listen to him.
This is that now we've got more people who have asked for credit. And here we are talking both companies and private households. So we've seen it quickening to the number that 3.2 from the 3.1 that we've seen recorded before, but that was less than what we expected in the market because we expected it to tick up to at least 3.5%. Remember, a good sign that the economy is growing. Also, what you need is to see people having access to credit. And now, so far, we've seen that especially businesses, they've been reluctant to take more credit because they're uncertain about the future. And also, what we've seen when it comes to households, we've seen the home and the car finance continuing to help out, but the financial institutions themselves are extra cautious to give that kind of lending to those people because they're also uncertain about the future. That is the supply of money into the economy by the Reserve Bank. So that the broad definition of that kind of money is the M3. So there's been an increase when it comes to that. But the most important one continues to be the credit extension. But yes, it's encouraging to see that there's been an increase when it comes to the broad supply of money into the economy.
That's where we end today's program. Thank you for watching. I am Bisi Adebayo. See you next time.